When global economic growth slows, we tend to see less economic activity, which also means less demand for oil, and thus usually an oil price that tends to go lower. Getting a lot of questions on the price of oil and whether it's time to buy oil or oil related securities. And ultimately, we do think this is going to come back fast and furious. As many of you guys know, we're very bullish on the energy sector through a multi-year lens. But what I want to show you here is just a little bit of perspective that I think goes a long way. This is the light crude oil price. It's the futures price, so you can track this with ETFs as well, of course. But what we're seeing is kind of like an equilibrium price just from a price range perspective, meaning we've seen the price of oil fluctuate to the upside by about 80% from here, and in extreme cases, to the downside by about 80%. So we're kind of right in the middle. It's almost like this is a mirror image. If I were to put a mirror here, it kind of displays, would show us the same thing, at least going back to the past 10 years or so. So I think this is not a spot that I would go and be short oil for sure, or oil stocks, or energy companies like ExxonMobil or something like that. But rather would be looking to see if we get some sort of reprieve, some sort of reversals. I think, the price of oil here in the low 60s as I'm recording this, it's probably a higher likelihood that we start to see a bottoming process than an outright collapse from here. But again, we haven't seen confirmation of that yet. So I guess my main message is we're in an equilibrium point from a price action perspective, from a price range perspective. My bet would be that the path of least resistance is higher, not lower from here, outside of a short crash, in which case that too would ultimately be a better buying opportunity. But I think I certainly wouldn't want to be short here for now.